I'm of the firm view that we are at the start of a commodity super cycle. I think it's quite evident. If we look at the way commodity prices are trending, it's incredible.
Well, hello and welcome to Assay TV. Today, I'm delighted to be joined by Nivaash Singh, who is the head of international mining finance investment banking at Nedbank CIB. Nivaash, great to see you today, joining us from your home office there in Johannesburg.
Yep, that's right. Good to see you, Leo. We're on lockdown and we're just pushing along.
Absolutely. I mean, we spoke almost exactly a year ago down at our one-to-one event in Cape Town. Very, very different world, obviously. Back then in February, things were only just getting started on the sort of with the pandemic. Everyone was wondering what was going to happen. We're now a year later, and I wanted to start things off by asking you, how has the pandemic affected you as debt finance providers? How have your sort of criteria changed through the pandemic?
Yeah, no, thank you. Good question. So I think from a client point of view, it depends on who you are. And to clarify, what that means is if you're a mining company in the pre-development phase and you haven't raised your capital, then I think you would be the hardest hit. And I say that because we're telling our clients who are yet to commence the development that they need to ensure their feasibility studies are COVID-19 compliant. And then if you in the development phase where you've raised your capital and you're busy with your construction program, then you should not be affected that much, providing you can access raw material and providing lockdown doesn't slow down your logistics chain. And then the third category of mining companies would be companies who are in production and are looking to perhaps expand their production through some additional brownfields project. So depending on who you are, I think, and where you are in the development cycle would determine Nedbank's credit appetite for mining companies.
And in terms of sort of your ability to do due diligence on these projects, how has sort of COVID travel bans and things like that impacted you?
It has impacted us quite significantly. We're on a lockdown for a good 7 months. South Africa's international borders were closed. We couldn't travel unless you were on a repatriation flight or if there's medical supplies that need to be shipped. And therefore, due diligence reviews became incredibly hard for Nedbank. We tried virtual site visits on a few occasions, and that worked to some extent, particularly for existing operators looking to expand their operations. But largely, we've been sort of grounded and unable to travel. So that has impacted our business. Again, particularly with the greenfields project, junior mining project financing side of the business. But on the larger corporate lending side, we've been able to get around it.
So overall, where has your money been directed in 2020?
I think a lot of credit support has been given to existing clients of the bank. We made a decision quite early on in the process that this pandemic was probably the most unpredictable event in our history. And a decision was made that we would stay close to our existing clients, make sure our existing clients stay in business and don't go under. And a fair amount of work and credit support was given to our existing clients. We made it very clear to incoming clients that we would continue supporting incoming clients, providing their feasibility studies where, as I mentioned earlier, COVID-19 compliant. And I say COVID-19 compliant because there has to be an impact from a capital procurement point of view on any new project that's being developed today. And we wanted our clients to go and reopen the feasibility studies to ensure that using the best possible estimates and re-looking at the assumptions, that their studies had a high degree of confidence.
Mm. And in terms of the commodities that you guys are looking at the moment, has that changed at all, or has that evolved over the year?
So it has remained relatively constant. And I just want to spend some time on this, Leo. I think it's quite an important point. Gold can be almost put onto the side because it's been the best performing commodity, as you know. We've seen gold prices hit levels that we've never seen before, certainly in living memory. And we continue to be quite bullish on gold. Base metals, particularly copper, zinc, nickel, has really fared very well. And the base metals have been outperforming since the pandemic started. And we remain quite bullish on base metals. On the new age commodities, and those are particularly your graphite, lithium, cobalt, that are key ingredients for the battery minerals market. We remain interested in those, but we also remain cautiously optimistic. And I say that because it's really hard to separate a hype towards a certain commodity or category of commodities from actual reality. And we see with lockdown, the demand for tech products has skyrocketed. And we see this being evidenced by market caps of tech companies like Apple and Google and Microsoft. But we are finding it incredibly hard to build a credit case around these upstream producers. I'm not saying it's impossible. All I'm saying is that we just have to be very measured in how we approach mining companies, particularly looking at extracting battery minerals.
Absolutely. But with the new administration in the US sort of heavily favoring, it seems, sort of, green development, what is your look at, looking into the future, looking into 2021, and as we come out of the pandemic, do you think you will favor those new age commodities a little more going forward?
I think so. It all comes back to being able to measure sustainable demand and not be tainted by traders that have a track record of skewing the market. And if there is sustainable demand that we can measure through, like the US re-entering the Paris Climate Agreement, that would create a lot more certainty and hopefully remove the hype from that market. We are very bullish on renewable energy, particularly for mining companies. And if you look at construction of wind turbines, as an example, you need a fair amount of base metals into those construction projects. And we remain quite confident that battery minerals need to be understood and need to be analyzed. And the more we progress into the future, particularly now getting used to living in a world such as we are living in today, we're going to have to make sure that we are ready for the battery minerals, call it consumption.
And that topic ties very nicely into another very hot issue at the moment, which is around ESG, environmental, social governance issues. What is Nedbank's take on ESG?
Critically important. ESG it's such a broad topic that it's really hard to simplify it in a matter of a few minutes. But for those who don't know, ESG stands for environmental, social, and corporate governance, or governance. And I think I would like to clarify the distinction between ESG in the context of our clients versus socially responsible investing, or SRI as they call it. And just to explain the difference between the two, ESG in the mining sector is critically important for Nedbank to ensure that all our clients are compliant from an environmental, social, and governance perspective. And there's no getting around that, particularly for commercial banks. And then socially responsible investing is where we look at our entire portfolio, and we have to create an equilibrium point to ensure that we put more money into mining operations that have a smaller carbon footprint than those that don't. And I think ESG is progressing quite rapidly in this new world that we're living in. And we are here supporting our clients that want to embark on decarbonization projects by providing them with sustainable financing solutions to help them embark on their own decarbonization journeys. And we have great products that we can offer our clients to help them initiate and progress on their own decarbonization programs.
How do you sort of rank and how do you weight between sort of environmental, social, and governance? What are your criteria for that? How do you benchmark it?
So it's incredibly hard to give a weighting to environmental, social, and governance. In my mind, and I'm pretty confident in Nedbank's own perspective, all three elements are critically important. And there's a great degree of interdependence on all three. You know, you can't have good governance without, you know, a responsible social management program, and vice versa. And the same for environmental. So I think that they are all equally important. And if you do a deep dive into each pillar in the ESG realm, you'll find that ultimately it all comes down to backing clients who really focus on each element in an equal sort of way. You know, there isn't one more important than the other.
Absolutely, it's all tied together. But looking forward into 2021, what do you see as the most important trends that we should be looking out for?
I think we are, and this is my own perspective, and just a disclaimer that I'm not a commodity analyst. We are debt providers, and that's what we do. I'm of the firm view that we are at the start of a commodity super cycle. I think it's quite evident. If we look at the way commodity prices are trending, it's incredible. 2021 for me is going to be the year where we're going to see excessive cash generation by companies, which is a good thing for African host governments in the form of increased taxes, increased royalties to help them fight this pandemic. It's a year of humanity as well. Mining and humanity, in my view, goes hand in hand. And we need to see more partnerships develop between mining companies and host governments. And it's no longer us versus them. It's about how do we come together, and that's mining sector, government, and financiers and investors on pooling our resources in fighting this pandemic.
Excellent. Well, that's a very sort of encouraging outlook, I guess, for 2021. We look forward to seeing how that develops over the course of the year, and hopefully, this time next year we can be all together again down in Cape Town. But thank you very much, Nivaash, for joining us today.
It's a pleasure, Leo, and I look forward to seeing you in sunny Cape Town next year.
Absolutely. Thank you, Nivaash.